Hello everyone, this is Nick Penev again with our next episode of the Networking on Steroids show. I'm the co-founder of Extreme Power Brand Scale and the partnership advisor of HelloTax and 40 other companies. And today we're doing a very interesting episode because we have recession supposedly. Economy is slowing down now. It's getting harder and harder to make money with e-commerce business, and that's why the title of today's episode is Profitability Practices: E-commerce bookkeeping, sales tax optimization, and accounting automation. Because if you don't know your numbers, you're never going to succeed in any business, and especially in e-commerce, which is a little specific. Today, the speakers are few close partners of mine. Some are old partners, some are new, but they're all experts in what they're doing. The first one is Peter Mantel, founder of Ampersand. He's going to talk about how to grow your e-commerce business in the USA during the European recession. Then another close and old partner of mine, Alana Ines, she's the founder of Rethink Accountancy. She's going to talk about delegate and automate your e-commerce accounting, because if you're not doing that, it would be a nightmare to figure this out. And then the last but not the least is one of my new partners, but he's a very cool guy with doing a lot of cool stuff. Tyler Jeffcoat. He's the founder of Seller Accountant, and his topic is going to be managing SQ profitability in the current e-commerce reality. Like usually, we're going to be around 30 minutes, and then at the end, we're going to have a Q&A session because we already have over 10 questions from people who cannot attend. So if you have questions, feel free to message us on the chat, and we're going to answer them in the end. And before we start, we're going to the 1 minute spotlight for one of my companies, Scale. And Scale is a company which is helping people to connect. That's how we connected with the guys today. We used to do it manually. Now we've built a software that anybody can do that. So imagine, instead of waiting for the opportunities to come to you, you create them yourself. But instead of chatting, now we have created a great video. So here is the video to actually
Meet
show.
Scale, the tool that streamlines proactive referrals and facilitates meaningful introductions. With Scale, you can easily exchange intros to expand your network and boost your business growth. Step 1. Sign up for free. You can conveniently sign up for Scale.com using your Gmail account. Step 2. Create your page. To create your Scale page, choose a unique handle, like this: https://app.scale.com, Nick Pehnev. Add your name, company, position, and a brief introduction. Step 3. Upload your contacts. You can easily upload your contacts, including partners, clients, or missed opportunities, and share their names, companies, positions, and also their LinkedIn profiles. Step 4. Request introductions. With at least 10 contacts, you're ready for Scale matchmaking, connecting you with users who share your ideal customer profile, ICP, for introduction swaps and referrals. Sign up today and try Scale for free.
Okay, guys, so that was short and sweet. I strongly recommend to sign up for Scale because it's free. Of course, we have paid version, but you get so much with the free one that you're going to think these guys are crazy. Do they make any profit? Okay, but that's not your concern, guys. But now I'm going to bring my guest to the stage, and they're going to talk about numbers, because if you don't cook your books in the e-commerce industry, you're never going to make money. So let me bring my guest to the stage. So here it is. The first one is Peter. Then it's Alana, and then here is Tyler. So, hey guys, I haven't seen you in like 3 minutes, I think. So, please introduce yourself. Let's start with the lady, Alana. Okay. She's a Highlander, she's from Scotland. She's going to introduce herself, then Peter, then Tyler, and then Peter is going to start first with his topic. So, thank you guys for accepting to be guests on my show.
Hi, so yeah, as Nick said, I am in the Highlands of Scotland just now, so it's a little bit cold up here just now as well. I am the founder of Rethink Accountancy. We are a digital paperless accountancy firm, and we specialize mostly in e-commerce. We work with hundreds of e-commerce sellers, mostly UK limited companies. And we try to help as much as we can to get their bottom line better for all our clients. So yeah, that's a little bit of a summary on us.
Thanks, Alana. Peter, I know you, but tell my guys don't tell everything. I don't want to know about your government stuff. I would like to leave another day.
No, Peter Mantell, pleasure to meet you all. Big fan of Scale and what Nick is doing here. I specialize in indirect taxes, specifically corporate taxes. Do a lot of work in the indirect tax space, specifically sales and use tax, franchise taxes, and some of those other fun things that make us all kind of just roll our eyes and say, please, no more. So been doing this since 2017. Is when we opened our doors. We were involved with the SCOTUS rule and bill wayfare and sending amicus briefs, asking that the government, in this case, the Supreme Court, not rule in the favor of the states. Obviously, that didn't go that way, but have been very involved behind the scenes on a lot of the big topics when it comes to indirect taxes in the U.S.
Thanks, man. And Tyler, now it's your turn, man.
Hey, guys. I'm Tyler Jeffcoat, founder of another accounting firm, Seller Accountant. So we're also here in the States. I live in awe, respect of what my two colleagues do here. I try to stay as far away from taxes as possible. You need adults to do that. And then, when it comes to EU-based firms, that's not really our specialty. But U.S.-based scaling e-commerce brands, sexy bookkeeping, and CFO services for maximum exits. That's what we do. I've been doing it about the same amount of time that Peter has, and we're just observing this evolving market right now and trying to figure out how do we continue to scratch a living out selling on Amazon and other e-commerce platforms.
Okay, thanks, Tyler. And right now, I didn't know that you're in recession, by the way, Peter, because I've never had as much businesses right now, but I tend to do very well in recessions because I do partnerships. You don't need money for that. But tell us now more about your topic. You can share some slides if you want to. I'm very curious now to let us know what you've prepared for us.
Absolutely. So let's go to the presentation and share that. Just want to confirm that you can see my presentation at the moment.
Yeah, give me a second. Okay, here it is. Yeah, I can see it.
Okay, how about now?
Yeah, looks good.
Okay. Very quickly, so let's talk about what's going on around us without getting really political, as Nick had stated. So, the long and the short, the elephant in the room is over the last several weeks, countries have been coming up and saying, yep, we're in a recession. They're confirming. UK came out last week, I think, or 2 weeks ago. China is having a major real estate issue. They're on the verge of it. Europe is on it, et cetera, et cetera, et cetera. We'll get into the politics. We'll get into what it means, though, for business. And what it means is that it doesn't mean that your business is over. It doesn't mean that you should be throwing your hands up and surrendering. If anything, this is a time that you get what we call here in the U.S. grittier. And what I mean by getting grittier is that you dig in, you find new revenue avenues and streams to expand. U.S. thus far has not been impacted by the global recession that's going on. I'm not suggesting that it won't be at some point, but right now it's in a good situation. And so as a byproduct, a lot of e-commerce brands are looking because sales volumes are still sustaining in the United States versus other markets. You're also seeing a lot of brands that have been doing very well in those markets just, have been growing, and now is the time for them to leave their current markets and expand globally. The one thing that we say about expanding to the U.S. market, you're going to spend a fair amount of money to get into the market to break in, but you can expect to 10x your sales in the U.S. versus other markets. There's a learning curve, obviously. We're going to go into some of that, but sales volumes and e-commerce does very well right now in the United States. So let's talk about entity formation, some of the other things. We don't necessarily get in the nuts and bolts, but what I will share here is that if you're going to be operating in the U.S., it's important to work with an accountant or bookkeeper to make sure that you're understanding business formation if you need to even form a business in the United States. For example, many cases, especially for UK entities, when they're first starting up, we do not recommend that you actually incorporate in the U.S. Because you're grabbing expenses that you don't need early on. And truth be told, unless you start working with an Amazon or you have physical inventory in the U.S., you don't have a reason to do so otherwise, unless you have operations or some other thing. So the big thing here is understanding when and where to incorporate in the U.S. and if you even need to. usually so as not to, as we say here in the US, convolute the formation and the infrastructure, it's important to make sure that you fully understand the repercussions of incorporating the US. It means that you're signing up for income taxes and other responsibilities potentially in the US. Now, we do have tax treaties between the US and the UK and Europe, so some of those income tax requirements criteria will offset when you do withholding taxes and et cetera. The next big thing that we're going to go into is state level registration. One of the big things here that's a really big pain in the tuchus for everybody is that in the UK or in Europe, you register countrywide. It's one registration, you're off to the races. In the US, our governments are much more fragmented, and so you have over 11,000 different jurisdictions, and each state has its own autonomy and a right to enact laws. So the problem with the US is that you have to determine what states you have hit the necessary criteria within for collecting and remitting. So now comes the buzzwords that everybody hears and we all cringe at. Nexus. Nexus is a term for saying that you have a sufficient enough of a presence in a category that you have to address the potential tax ramifications associated with that category. In the US, the three big categories that we keep an eye on for our clients are physical first and foremost. And examples of physical would be Amazon, FBA, etc. Economic is when you have a certain sales volume within a certain state. The average is about $100,000 US in sales or 200 transactions. That fluctuates and varies state by state. So those are the big things as far as the nexus. And the final part is affiliate nexus, which is if you're selling to distributors in the United States, depending on that relationship with that distributor, you may have a responsibility. Sales tax collection and remittance. So very quickly here, all we're looking at is just saying when you register, you're registering as an agent of the state. And what that means is that as such, you are authorized to collect the taxes on behalf of the state, but also in the same regard, you have to remit whatever you collect. This is an area where we kind of assist in making sure that those things end up getting properly assessed and properly collected and remitted. Another big area to keep your eye on is intellectual property in the United States, making sure that you have the right type of trademarks and protections with your brand and product, making sure that you communicate with the right type of U.S. attorneys, and ensuring that you're properly trademarking your solution, understanding how intellectual property works in the United States. The worst thing that you can do is spend all this time, effort, money, and marketing and everything else to build up a brand, but you didn't protect that brand. And so as a byproduct of it, all of a sudden now, other people just replicate and copy your solution. So it's critical to make sure that you're working with an attorney in relationship to brand protection and copyrights. Fulfillment operations. So where are you going to be sending your inventory? Is it coming from an FBA location or third-party logistic, also known as 3PL? Or are you shipping directly from your destination in Europe or in the United States? What state are you shipping from? All of those fulfillment options can potentially have what we call that physical nexus complication. Finally, shipping and handling in that aspect. Some states actually require you to collect or remit sales tax on shipping. Other ones don't. Same thing with handling. Again, these are areas that create massive amounts of complexities. And that's why it's so important to work with a firm in making sure that you do that right. Now, if you start marketing in the United States, you have GDPR in Europe, but in the United States, in California, we have CCPA. And what has effectively happened now is that in the state of California, they have similar type laws to GDPR that protects consumers' rights and their information, meaning that you can't just start selling consumer information, especially in California. That is something that's subject to potentially expand. As of today, it's only California related. Because of that, you need to make sure that your marketing strategy is aligned with U.S. requirements and advertising laws. It can't be misconstrued as some form of propaganda or anything like that. It needs to be associated with a product, et cetera, et cetera, et cetera. That kind of stuff. And some of the big things that's going to be very critical is if you're a mom and pop or brick and mortar, e-commerce is the future. In the United States, everything is shifting right now, and you see a lot of the brick and mortar entities moving in the direction of e-commerce. Leveraging e-commerce makes you a global presence, but it also comes with its own complications. Obviously, yet again, the biggest benefit is that even if your own personal market is dealing with an economic problem, it gives you and affords you the ability to go into other markets that may not have the same conflicts, if you will. And then we help in making sure, at least on the indirect tax side, the sales and use tax and the nexus and all those other things, that you're properly set up and properly understand your responsibilities when it comes to such obligations. In closing, I'd like to thank everyone for their time, and hopefully this has been informative, short, and to the point as to your obligations expanding to the U.S.
One question, Peter. Let's say I would like to expand to the States. What is the easiest way to do it? Because obviously, if you go on Shopify, D2C, I know it's hard. So, what is the low-hanging fruit? I am like a billionaire and I want to burn some cash expanding to the USA. So, where should I go?
Well, there's the lean approach where you just start selling into that market. You don't have any nexus responsibilities unless you have a presence there. And so what I would suggest always is, dip your toe in the water. If you start to accrue or incur a lot of debts out of the gate, and you don't have your product market mix figured out and a lot of these other variables, your business isn't going to last very long. And ultimately, we want your business to grow and thrive. So a lot of, what we're cautious and what we recommend, though, is that start getting into the market. You can start selling products into the US from the UK. Then as you're growing, expanding sales into the US, keep an eye on what is actually happening and making sure that certain states, when your sales volumes hit certain de minimis thresholds, that you're keeping an eye on that. So long and the short, Nick, is that I would say start selling into the market, which you can do through Shopify or your own WooCommerce or eBay. And then start to understand how your product mix works within this market.
Okay, thanks, Peter. And just to add something, because what Peter said is very good, but for example, one of my companies is doing something which you call the expansion to the USA blueprint. So if you want to go, we're going to do like a opportunity report, and we're going to tell you if you even should bother going to the States. We just need your website, your product idea, and we're going to do a swipe and we're going to tell, okay, here is the opportunity. This is what you can expect. And once you have the balls to do the next step, we're going to send you to Peter, because that's how we get started. But first, we're going to tell you if there is an opportunity. But that's another story. So get in touch if you need to learn that. So next, we're going to the next topic. This Alana Ines is going to talk about how to delegate and automate your e-commerce accounting, because for a fact, I know that a lot of sellers they're still using spreadsheets, which is a nightmare. A lot of accountants, bookkeepers have no idea what is like e-commerce accounting. So thanks, Alana, for joining us today. So tell us more about your topic, and tell us, the e-commerce sellers, what they're missing and how many hours and how much money actually they're wasting if they don't do that. So thanks again.
Okay, so yeah, I'm going to speak a little bit about delegation and automation of your e-commerce business. I've got no slides, so you're just going to have to listen to me for the next 10 minutes. I'm going to talk a little bit mostly about the advice that I'm going to give is actually probably based around UK limited companies, because that's what my bread and butter is, and that's what I deal mostly with. So the other guys are going to speak mostly about the US, but I'm going to be speaking a little bit about UK limited companies today. So I don't think it's going to be the hugest of shocks. I'm going to say the biggest area that you can delegate when you become an e-commerce business is to invest in an accountant and getting a good accounting firm behind you and backing you and giving you advice. So I have loads of conversations, and over the years, I've had some pretty horrible conversations of late and of recent where people have said to me, I have invested my life savings and I've went and bought a load of stock from China. I have paid for courses. I have paid for advertising, but I decided that I could do the accounting and I would do all the tax planning myself, because this is not something that's important. This is an area that I thought I could do myself, but I invested my whole life savings in something else in stock in other areas, but I didn't get tax advice. I didn't get advice when I was setting up. So like, if you are going to set up an e-commerce business, one of the most important things you should be having in place from the start is an accountant and getting proper tax advice on your structure, on your setup, on how you're going to go forward. So I'm going to go over a couple of few areas and the pitfalls that we've gone over with people in the last couple of years, the areas that have came up where we have said, if we had been in there from the start and we've been helping you from the start, we would have been able to stop that or avoid that or change that. So one of the biggest areas that we see quite a lot is people will come to us and they will see, well, yeah, I started up and I hit the VAT registration level really quickly and I just registered for VAT. And I went for the standard scheme and I registered. So there's a few different areas that can go wrong here as well if you're a UK limited company. So if you're a UK limited company, there are different VAT schemes. There's different ways to account for your VAT. So there's flat rate schemes as well. So a lot of people will come to us and they've maybe not aware of all the schemes that are available to them. And they've ended up doing a whole year on this VAT scheme before they come to us. And if they had came to us and told us, would you assess it? Would you go through it? There could be savings of £20,000, £30,000 on their bottom line if they had spoke to us from the start and we'd have assessed the VAT and seen what was best for their business. That is a fraction of what we charge per year. So we would have covered our cost and we would have been able to save you a lot more money as you're going forward. So you'd have got the right VAT scheme in for you. Another thing that some people are not aware of is when they become VAT registered, the HMRC, they don't give away that many benefits or VAT or any benefits really at the moment. But one of the things when you're a UK limited company, they do allow you to do a pre-registration exercise. So you can claim VAT on your services for 6 months prior to the date of registration. And then you can also claim back the VAT on the goods that you still hold for 4 years prior to the tax point. And also any assets that you still hold. So if you bought a laptop or anything in the prior 4 years, you can claim the VAT on that. So that can be a really good windfall when you first become VAT registered. It can help offset your first VAT return. And some people are like, when they come on, they're maybe not aware of that and they miss out on that. And if you don't do it in your first VAT return, you can't claim it in any other future VAT return. So if you've not got someone that's got the knowledge to be able to advise you on that, that might be a good saving that you've missed out on as well. So another area that we see a lot of people that they do not keep the correct records. So people will come to us and they will say 2-3 years down the line, and then maybe the VAT have come in and said, okay, we're going to do an inspection. And then when we go and look at the records and what they've kept as records, they have collected pro forma invoices. Now, pro forma invoices is something that's quite common that we see a lot of when we do our VAT checks every quarter. So pro forma invoices are not invoices in the eyes of HMRC. They are requests for payments. If HMRC receive this as a support, they will just return it and say, we are not paying you the VAT because this is not a tax invoice. This is a request for payment. So then they will take the VAT money back from you if you use a pro forma as a support document. Another document that's quite common that we see a lot of that comes in from a lot of our Chinese suppliers is a commercial document. Now, a lot of these Chinese suppliers know that they have to give commercial invoices for freight purposes. But again, for HMRC purposes, these are not acceptable by HMRC for VAT or for most of them not VAT, but for tax purposes, these are not acceptable by HMRC. So if you have an accountant in place, they will be checking these documents. They will make sure you've got the correct supporting documents. They will make sure you've got the tax invoices that you need to make sure that you're getting all the taxes back and collecting everything that you can from HMRC back to yourself and into your business. One of the other areas is import tax. It can become quite a complex area if you do not have your Aurora number, if you do not have your EIN number in place, if you do not have a C79 in place. Now we've had people come to us after a while and they said, oh, we've collected all this import tax. And then when we go and say, well, can we see your C79s as support? Because you can only claim the VAT if you've got a C79 form from HMRC. They say, no, I've got an invoice from DHL or I've got something from DHL. HMRC will not accept that as support. And if they do a review, they will take that VAT money back from you again. So these are some of the areas that, like, it comes up time and time again when people come to us maybe a couple of years down the road, or they've maybe got an inspection and they're like, okay, I need some help, I need some support. So this is some of the areas that we come across quite a lot. One of the other areas that I would say is most important for having an accountant in place is peace of mind for you as a business owner. Most business owners who set up in e-commerce, they set up because they want a sideline, they want to make some money on the side. A lot of them have main jobs, and this is a side job for them. And their main job is banking, hairdressing, owning a pub. They do not know the ins and outs of tax and how it affects them, but they're doing this side hustle, or they're doing this job, or maybe they've decided to go down this route. But why would you, when you're already focusing on something like running your business, sourcing goods, dealing with reviews, dealing with people coming in and like knocking you off the first page or whatever, why would you want to then go and spend all this time learning about taxes? Because it can be quite onerous. There's a lot to learn, there's a lot to go on. So I would say it's definitely something to give you the peace of mind to know that you don't need to learn all these rules and procedures on how HMRC work. We are HMRC agents as well, so we're registered agents. It also means that when we submit anything for any of our clients, that we take a little bit of the responsibility on what's submitted as well. So also means that our clients, there's less chance that they will be pulled for an inspection or checked for an inquiry on their records, because HMRC will know that we are also liable for anything that's in there, and we're a registered agent that they've verified, so they can say, well, we're quite sure that most of the documentation submitted through our agent gateway will be correct. So it gives you that little bit of peace of mind as well. There's less chance that you're going to get your records checked as well. And another thing about the delegation is that we don't work just with the business. Although we work with UK limited companies, we also work with the directors. So we do tax planning with each of our directors. So setting the business up, you might set it up and you've got a big nest egg of money in there, but you have other sources that are coming in. So we will tax plan with each director, and we will work out the best ways to extract the profits from the business, or if we are going to keep it all in there and close it down with a few different vehicles, if we're going to set up pensions, there's different ways that we can profit extract with our clients. So it does make good sense to have an accountant in place from start, and any good accountant will cover their fees and will probably make you money and save you money as well. So definitely get one in place. The second point I'm going to speak about as well is automation. And I would say the most important thing about the whole automation is it gives you back time, and it's one of the most important things for everybody. I think we can say at the moment, we all want more time, we all want to relax. So automate as much as you can of your business. Do not rely on spreadsheets. Do not rely on anything that can give you human error. There's too many areas in there when you try to rely on spreadsheets to run your business that human error will happen. So one of the ways that we do that is we offer an app stack to our clients to try and automate as much of our businesses when they come on board with us. So we offer them accounting software, we offer them bookkeeping software, we offer them a dedicated bookkeeping emailing address, and then on top of that, we do offer sales bridge software, which connects with most of the sales platforms out there. So for essentially Amazon, we can log and get read-only information with your Amazon account. Now, Amazon, when it sends a settlement out to any seller, it will split it down. I think there's 16 categories. Last time I checked, it might have changed. So there is 16 different categories on a settlement. So that can be anything from reserve amounts, fees, storage, loan amounts, anything that it splits it down into. So unless you have that sales bridge information and you're splitting every settlement that's coming down into these 16 different categories, there's a good chance that you're going to be getting your accounting wrong. So another example of where these sales bridge softwares really helps is we used to see lots of people that would come to us after a couple of years and say, I've been doing my accounting myself and I have just been doing it manually by reconciling my bank, the net amount that comes into my bank, and just reconciling that as a sale and recognizing that as a sale. Now, the net amount that you get paid from Amazon is not what you should be recording. There should be a gross amount of sales, and then there can be quite a lot of deductions from that. So if you were to then reconcile just from your bank, you could be understating your accounts by quite a bit. And then if HMRC did come in and do a check and went back a couple of years, you could be getting yourself quite a lot of fines and interest by understating your accounts in your business as well. So it's another area that automation can really help save you time, but it can also give you that peace of mind that you know that everything's going to be correct going forward. So with all this automation in place, it means that our life is a little bit easier as accountants, so we can spend more time working with you and advising you and letting you understand your figures as well. So we provide quarterly management reports to most of our clients as well. So we give insights into your business, maybe areas, look at your gross profits, look at your margins, look at areas that you could be doing better. We also give tax estimates to all our clients. So we say, you are 6 months into your financial year. This is what we estimate your corporation tax is at the moment. Do not go and spend that money, because you do need to pay the government back that money, not maybe for another 6 or 7 months, but keep that money there. Don't go spend it. Don't think it's yours. Keep that there. So we try and give as much estimates and as tax advice as we can to people. We never want there to be any nasty shocks when we get to a year end. I have had some horrible conversations in years gone by where I would get to maybe the end of a financial year and say to someone, you've got a £70,000 tax bill. And they were like, how did that happen? How did we get there? I didn't realize this. I didn't realize that. I didn't realize this would happen. So because we're giving our clients always this regular estimates and regular advice, there's no nasty shocks. You're always aware of how your business is doing and any taxes that are going to be paid or be expected from you. So I think, that's probably a good summary on how I think you should automate and delegate your business.
Okay, I have actually 2 questions, and we can go to Tyler. So the first question is, when sellers, business owners come to you, what is the average that you can actually save them? Because they have no idea what they're doing. So what percentage of what they have been paying, you kind of save them so they don't pay that? Do you have this number?
No, I probably don't have that number.
You should have it.
Yeah. So it really depends. Do you know something? It's really difficult, I find, because sometimes as well, someone will get a startup business and they'll come to us, and I think that's a crazy idea. That product's never going to sell. That's never going to take off, and it goes amazing, and they do really, really well. And then the next time someone will come to me, and I'm thinking, okay, that's a really good idea, and it just doesn't translate. So sometimes, it can depend on how quickly they launch, how quickly they get to VAT registration limit, how quickly, if they want to expand into the EU. Some clients are going into the US. We've got a lot of clients going into the US. We've got clients now moving into Walmart, where in Walmart, maybe the sales and the costs are not quite as high as Amazon in different areas. So every business is different, and we've got a lot of people going into wholesale, whereas before it was a lot of private label in Amazon. We've got a lot of people that are moving, I can never say this word, retail arbitrage.
Arbitrage.
That's a word. So we've got a lot of people going into there where the margins are different on there as well. So because and we also have people who sell digital products on platforms like eCommerce. Now the margins on that are really, really, really good on there. They're amazing margins. I don't understand how more people don't go into doing the digital products on places like that, but it really depends on the marketplace, on the margins, and how they're going to do. Every business is different. We work with every business, but I think we do a little bit of benchmarking as well, and give our clients a little bit of benchmarking on where they are compared to other people that sell quite like them as well.
Okay, thanks, Alana. And just the summary now: get an e-commerce accountant, get Alana, or you can do the spreadsheets, or you can just don't do any taxes, don't pay any taxes. I mean, like some Chinese guys used to do.
Yeah. I think it's becoming so much more difficult, even for Chinese sellers that were coming in. They're regulating so much more.
They have no chance. I mean, they apply new rules. They cannot avoid paying VAT. But right now we're gonna talk. We're gonna have our last but not the least guest, Tyler Jeffcoat. I see your presentation is ready, Tyler. So thanks for waiting, and tell us more about your topic, because just give me a second. No. Okay.
Awesome.
So
Well, go
you're
ahead.
talking about the best stuff, like profitability, because see, my wife, she doesn't care how much revenue you have, she only cares about the profit. So tell everybody, about profitability and what people need to know. So thanks again.
Well, I think what I took away from those first two presentations is that we need to hire Peter and Alana to handle our compliance. I think staying out of jail and staying like solid on your compliance, like you kind of don't get to participate in the game unless you can cover those things. But once you get your compliance done, as Nick mentioned, sales is vanity, profit is sanity, right? We let's stop being insane. We have to make a living. And I just want to start this quick presentation by just painting you a quick picture of where selling on Amazon has come in the last roughly 20 years. Version 1.0, Amazon was begging us, please come sell on Amazon. For the love of all that is good and holy, would you give us your products? We'll pay for the advertising and we'll make the product move. And so if you were one of the first third-party merchants back in the mid 2000s, you literally listed a product and you counted money. That was your entire job. It was very simple at that point. But the marketplace has evolved. And so just to kind of fast forward to number 4, kind of on the left-hand side of my screen here, during a roughly 24-month period, we saw $13.8 billion of venture capital raised into the space in the form of aggregators to buy and roll up Amazon businesses. What's fascinating, and I haven't even added this to the slide yet because this is an older slide, but guess what, guys? The largest aggregator in the world filed Chapter 11 bankruptcy last Wednesday. And the second largest one just merged with the German firm Razor. And so now we just have major restructuring of debt. My point is that you can't just list a product and expect to make money anymore. We actually have to manage our portfolios. And so I want to make sure that this presentation is pretty high and tight here. And I'm going to skip a couple of slides here because I want to give you guys kind of the meat here. If you don't have good accounting, please get good accounting. But I want to talk to you about what I call PAG. So KPI that I want you to kind of take, put it in your tool belt, is I would call this true gross profit, post-advertising gross profit, after advertising gross profit, real profit after we pay all of our Amazon fees and our direct advertising expenses. And I want to tell you a story. 3 or 4 years ago, when Peter, Alana, and I were helping our clients, a fairly typical PAG would have been what you see on the screen right now. 25%, margins were nice. And you could accomplish that PAG either the way you see us doing it now, or you could have a slightly higher COGS factor with a more efficient advertising. In other words, there's more than one way to skin the cat. You either need to have premium margins in your products, like on the left-hand side here, where I can afford to outcompete my competitors with advertising, or I've got to have really, really lean ads because I have less margin after I purchase my products. That makes sense. But the world is changing. Alana, Peter, and I aren't having quite as sexy conversations with our customers as we were 3 or 4 years ago because it's harder right now. There's more pressure on tacos. And so the picture looks a little bit more like what you're seeing on my screen now. It's still good. But guys, we have to manage this really carefully now because we can get upside down really quickly. I'll give you an example of this. Let's say that our margins were even smaller. Let's paint let's paint a little bit negative picture. We only have 15% profit after ads, after Amazon fees, and we have to borrow money. That's a hard situation right now because the cost of capital is the highest it's been in 20 plus years. And if our margins are creeping below 15%, so 2 questions I want you to ask yourself. Immediate value here. Go look at your bookkeeping system, whatever that is, and see over the last couple of months what your actual profit margin is. If you don't know, then you probably need to hire one of us in this room to help you fix it because it is unacceptable to not understand your profitability from last month. If you do know and you're concerned because your margins are slim, then let's keep going. I'm going to show you another KPI that I think you should look at. Let me keep talking here. So if you need to improve profitability, first of all, you need to make sure you can see profitability. You need to measure this kind of profitability on a channel basis. So I need to understand, is Amazon, are my EU marketplaces profitable? Is my US marketplace profitable? Is my Shopify site profitable? I need to make sure I have a mechanism. Alana, you alluded to some dashboards and tools. We got to use those, guys. We got to understand how each of our sales channels are performing. And then we got to make a decision. And this is hard. But when I look at a product, I'm running it through a keep, cuddle, or kill matrix. These aren't my children. Friends, I love my children. My children are great. They don't get killed. They just get cuddled. I'm always going to keep them. But when it comes to an ASIN, if my ASIN isn't generating profitability at an acceptable level, I'm going to put it on a cuddle list. We're going to keep a close eye on it. We're going to nurture. We're going to try to improve the performance of this teammate that is product A. And then if product A can't perform, we don't feel good about it, but we got to kill the product. We're going to have to pivot that capital into another investment, because what we've learned is that the current investment strategy isn't working. And so it's time to view our catalog more objectively than we have been. These aren't our babies. These are products. And if they're not working for us, capital's too expensive. We need to pull them somewhere else. Let me tell you about one more KPI really quickly. And this one's return on inventory investment. Now, okay, listen, I'm going to skip my success rate story real quick. Because I'm going to look ignorant because I'm an American. You guys are probably more European. So let me not look like an idiot here. Alana, forgive me for even putting a European football player on the screen. Unacceptable lack of tact. But when you look at PAG, that's what I'm giving you here, profitability. If I could understand that profit divided by the inventory investment, which is cost of goods sold, for any of you guys like me and Peter in the States, we love baseball here in the States. This gives us our batting average. How effective am I on average every time I get to take a swing? Okay. That batting average is a really important metric for understanding how potent this product is at generating profit each turn, right? That's ROII. We got to start paying attention to return on inventory investment. And for products that are maybe less than 50% return on inventory investment, we may want to look to make some adjustments. And then I'm just going to mention a third one really quickly. This is the holy grail, baby. This is the one that if you can figure this out on an ASIN level, you can outperform. Actually, I'll put it this way. All 5 of the 8x multiple exits that I was involved with as a CFO in the past 4 years had returns on capital exceeding 4, which is the picture you have on the screen right now. And so if I can take my batting average, 83%, times the number of at-bats I get in a year, I can create an expected value for every dollar, euro, pound that I invest into this business. For the business on the screen here, an 83% batting average times 5 at-bats per year, that's inventory turns, is a 4.17 return on capital. I'm not kidding, guys. All 5 of the monster multiple exits that I was involved with had returns on capital above 4. If yours is less than that, it's time to take a close look at our execution strategy. Can we get better payment terms so we can make our cash flow cycle better? Can we improve our margins? Because here's the secret. I can improve this formula either by improving profitability or by improving cash flow. If I just accelerate my cash through my business, I can actually generate more return on investment. And so I can be an average hitter. Tyler's an average hitter. But buddy, if you give me 10 at-bats in a year, I'm going to get a hit eventually, right? That's what we're trying to do with our products that aren't quite as good. So I'm going to end with that so that we can do some Q&A and move on. But that would be my presentation here, Nick.
Tower, you guys are very impressive, by the way. Even though you cover the most unsexy topic, nobody can go without you guys. And some terms from Alana and you, it sounds like Chinese, but people need to know their numbers, because see, when I started selling e-commerce like 15 years ago, I was paying 1 cent per click. My ad spend at the beginning was like $200 and 200 sales. We're doing like over like 40,000 sales, so the return on investment was crazy. That's gone, now you cannot think of to do that. So you need to be realistic. You need to know your numbers. You need to use automation tools, and you need to know what you should remove, what should add, because otherwise you're not going to succeed. Which is good in a way, because if your competitors are not doing that, eventually they're gonna go down. So just that's why we do those webinars, just to give you some tips, because no, you're not paying anything. I mean, we're not selling anything. We're actually helping you out. So if you want to get in touch with our guests, and you can chat separately for what they're doing, how they can help you out. But right now we had some people who cannot join the event, and we're gonna start with the questions. So let's start with the first question. This is from Emily Parker. Let me just pose the question. I think all of you guys can actually answer that. So the first question is, are there any other metrics that you want sellers to keep an eye on? So I think that's for you, Tyler.
Other metrics. Yeah, so I think I've mentioned a bunch of them. Let me bring your special attention to what I call CAL, C-A-L. This is cost of goods sold plus tacos. What is the total cost of getting my ads and my COGS loaded? And just remember, I mentioned this a minute ago, but that is a seesaw. The more product margin I have, the more I can afford to pay for advertising. And the less product margin I have, the less I can afford to pay for advertising. We got to start measuring that.
Okay, thanks, Tyler. We go to the next question from Wei Chen. Okay, let me just post it. So the next question is, can U.S. states enforce sales tax obligations to vendors from other country outside of the USA? So that's for you, Peter.
Yeah. So the answer is absolutely. Vendors can most certainly have what they call nexus without any other thing than just having certain de minimis sales volumes. Effectively, the sales tax component of what we do is not protected by any treaties between the U.S. and other countries. So the long and the short of it all is that you are subject to the same sales tax responsibilities and criteria as if you were living in the U.S. in that area.
Okay, thanks, Peter. We go to the next question from Romina Müller. What happens if you do not have the correct support documentation if HMRC does a record check? That's for you, Alana.
Yeah, so this can be assessed in a few different ways as well. So HMRC, if they do decide that you do not have the support documentation, they will make you pay the VAT that you did collect from them back, but they can also add interest and fines. Now, these fines go in structured ways because they're also assessed, is it deliberate that you deliberately made this mistake and they think you deliberately collected this VAT, or was it just careless and you made a careless mistake and you got it back? But if it's deemed to be deliberate and they think that you're deliberately trying to defraud the HMRC and the UK government, the fines can be quite considerable as well on there.
Okay, thanks. So, and actually, this is a question, I think it's for all of you, from Olivia Matesans. When would you say is the best point to engage with an accountant? I assume she makes e-commerce accountant.
I would say the minute you think you're going to incorporate, because some people don't even know the correct status of how they should incorporate. They don't know how to structure their limited companies. They don't know the shares and how the shares will affect them with other sources of income that they've got as well. So I would say not to even incorporate, because a lot of people just say, I'll incorporate the limited company myself, I'll do it all myself. And even things like the registered office, how that affects your VAT. So for me, it's from incorporation date, you need to have someone in place advising you.
Okay, thanks, guys. Another question, I think that's for you, Tyler, from Leila Petrov. Trust you filed for Chapter 11 bankruptcy last week with Enrazer Group merged with Purge. What impact will these aggregator events have on sellers? I think you touched base on that, but you can answer again.
I think the impact part of it, Nick, is we had a lot of venture-backed companies overbidding for keywords on Amazon. And as they simplify and start having to manage their own money, I think we'll actually see some small benefits. It'll actually help tacos in some categories. And also, by the way, this is a vote for self-esteem for our sellers. What we've learned over the last 4 years is that you guys are a whole hell of a lot better at this than Thrasio, Perch, and Razor. So way to go. Keep it up.
Yeah, actually, exactly. One of my close friends and partners, Ben Leonard, he sold one of his brands to Thrasio, and now he's having a campaign to actually buy it back and scale it in a way. So But anyways, I mean, I used to, like 10 of the aggregators used to be Coins at my partner agency. They never listened to my advice. They burned cash on events, like 100K on Prosper, 100K on this event. And I asked them, okay, what is the return on investment? I don't know, Nick. we don't know. Okay, man. So that's what happens when you're spending other guys' money. That's why I avoid funding like the plague. That's it. But that's my opinion. So
I just think that if you're ever going to buy a business, you want to make sure you talk to someone who talks like Alana and like Peter here. Like you don't want the guy that just got out of like MBA sales school and like gets paid just to close. Somebody actually needs to understand the numbers behind this business. And so I think having adults that actually look at balance sheets as part of due diligence wasn't a thing early on, and these companies are paying for it.
Yeah. By the way, it's good that you mentioned that, because one of my aggregator clients, they told me that the due diligence that they were doing was not very well done, and obviously the numbers that they're supposedly checking, they were not real. And actually, another aggregator, a guy who worked in aggregate, they built a software who actually provides true due diligence, but that was long before they have acquired all those companies. So, see, that's why you need people who understand the numbers, because the buyer, the seller, they can try to fix their numbers so they look better, they get a higher multiple. And I think that's what happened with a lot of those aggregators. But that's another topic. We're not going to solve their issue. So let's go to the next question. This is from Matteo Bianchi. How come I have to register state by state in the USA, whereas I only have to register at the country level in VAT? That's for you, Peter.
So that's a good question, and we get that often actually from different clients. Hey, if I register in one state, am I good to go for the U.S.? No, it's a convolution of the system and infrastructure here in the United States. And what I mean by that is within a state, there are jurisdictions that actually have their own power as well beyond the state's power. So if you look at like Colorado, not to overcomplicate this, but they have this thing called home rule jurisdictions, where effectively the jurisdictions in that state opted to secede from the rest of the state, which I don't understand the legality and the laws and policy behind that, but I'm not going to go down that road at all. The long and the short is that each state operates as its own country in the United States, and all their data gets reported upwards to the feds. Sales tax in the U.S. actually is strongly utilized for reporting economics, which a lot of people don't know that. So usually a lot of the state sales tax reports go into what the feds end up reporting from an economics perspective as to how the consumer base is doing. So because of that reason, they want to keep everything as divided as possible. That's also why states have to refund if you can prove that sales tax was already collected and remitted once. Because they have to make sure that the tax is properly and accurately remitted at one time, and they can't double up on that. So to answer this, and that was a little bit of a long explanation, but the long and the short is that yes, each state is unique and different, and they all have their own unique set of laws for one another.
Okay, thanks, Peter. Then we go to the next question from Harper Carter. Do you have any tips for managing cash flow better? I think all of you guys can cover that, but probably Tyler can answer because he mentioned that in his presentation.
Yeah, for us, I think when it comes to managing cash flow, it's just, yes, you need to manage cash flow. It sounds like guys, the wrong time to have a relationship with a banker is in 2:30 in the morning when you're in the fetal position, praying that you can make payroll or make a PO payment tomorrow. That's the wrong time. The wrong time to need a relief from your supplier in China on payment terms is not at 2:30 in the morning when you're hoping your wire will go through. I need you guys to spend 5 minutes a week developing relationships with your suppliers so that you can ask them for better payment terms and better cash terms. And then I need you to spend one trip a year dusting off the passport, flying overseas, kissing babies, drinking sake, doing the things that you have to do to develop meaningful transformational relationships so that your vendors are your business partners and not just some distant person through an email.
And one thing I'd like to compliment Tyler on that one aspect, which is we have dealt with all kinds of sellers, big name brands, all kinds of brands, etc. And I can tell you from our experience thus far, the companies with the Tylers are the companies that are still around today. When you're having that level of transparency, when you're having that level of understanding of how your metrics operate, when you get into these economic turbulent waters, this is where Tyler saves the business and keeps it alive for you. So a lot of the times, going back to one of the questions that was asked about, when is the best point to engage with an accountant? I would say as soon as you realize that this is not what we call in the US a side hustle. When this becomes a business and you want it to grow as an empire, then you must be talking to the Tylers and everybody else in this group, because when it's all said and done, the biggest problem here is that you live or die by your books in that aspect. And that is a Rosetta Stone for how you succeed or die.
Okay, that's good, guys. So another one from, I think the was, or just two more. Okay, so this one is from Dan Popescu. Would you say using a sales bridge software is necessary? I think all of you guys can answer, but probably Alana, she can mention it. And also, which software is she using, by the way? That would be a good tip.
Yeah. So, as I mentioned earlier, Sales Bridge is essential for any business information. We get read-only access, so we're not going into your account, we're not getting your payment information, but having the correct information so there's no human error to make sure everything's categorized correctly is very, very important. We use two softwares. We offer Parex as well, which offers, I think they have like about 10 connections just now. They go into most of the sales platforms as well. And we also work with Link My Books as well. I think Dan's been on here quite a few times before, and we work with a lot of people that sell through Link My Books as well. So that's the two softwares that we use, and we basically will not engage or work with a client unless they're using one of them two softwares.
Okay, I know both guys. Yeah, I know both guys. Actually, Dan was one of the speakers in Danzig's webinar last year with Peter. So he's an ex-Amazon seller who exited his brand. So he built the software like the guys at HelloTax. They used to be Amazon sellers. They didn't like the VAT component softwares. They built that. So that's pretty much how it works. And now we're having the last question, and we can actually end this cool chat. This is from Mino Park. How do you tax treaties apply when it comes to US sales tax? That's for you, Peter.
All right, let's talk about international policy and the application of international policy. Tax treaties do not apply to sales tax. The long and the short of it is that these taxes, when a tax treaty is created, effectively what occurs here is that you have to deal with the fact that they are specifically articulating the types of taxes and the type of protections, et cetera. This goes through government infrastructure, approval process, oversight, et cetera, et cetera, et cetera. It's not an easy overnight, fly-by-night kind of thing. So a lot of what happens as part of all this is that unless they specifically outline the indirect taxes, sales, use, VAT, which, by the way, no country has done yet. I am not aware of any tax treaty when it comes to indirect taxes in any country. These are usually, consumption, and these taxes are a form of making this whole venture very lucrative. So the long and the short is that there are no, when it comes to sales and use tax, there are no tax treaties. On the income side, you want to keep an eye on your business in that aspect, depending on how you're going to incorporate where, and that gets into your operations. And that's how you kind of get into some of those kind of better understanding. That once again, that's where Tyler's going to come in understanding, well, he's going to sit as an attorney probably on the tax treaty side, but he's going to be evaluating, more specifically when and how you should be applying such strategies.
Okay, thanks, Peter. And here is our last question, because we need to close shop for the day. This is from Juanita. Juanita Bildat Frawana. What are the key income tax considerations for UK and non-UK e-commerce traders with respect to tax residence and source of income? Juanita, I have shared Alana's email because we wouldn't have time to answer every other question. So please answer, Juanita, and I've shared your email so you can guys chat after that.
Okay. Yeah, Juanita is one of my clients, so I can talk with her later.
Okay, she's...
Yeah. But Juanita is, different people. We work with although we deal with mostly UK limited companies, a lot of our clients are based, maybe residency outside the UK. And although they're limited company as an entity and treated in the UK, we need to work with the directors and the shareholders separately on their tax and how we profit extract and how they report their taxes in the countries that they're resident as well. So that's something that we work with and do alongside as well.
Okay, guys, so I think we had a lot of questions. I mean, I guess I always think that this is the most boring webinars and we had the most traction. So if some of you guys missed the webinar, no worries. We're going to feature that in my newsletter, Ecom Hot Sauce, and now you can subscribe for that. I strongly recommend to follow my guests today. They talk Chinese, but not real Chinese, like e-commerce Chinese. So if you don't speak e-commerce, like accounting Chinese, get in touch with them. They're going to help you out. And just sign up for our Scale YouTube channel. Follow me on LinkedIn. You're gonna keep on sharing such webinars with experts in the e-commerce space. So thanks for joining, guys. Thanks for everybody who was watching, and enjoy the rest of the day, evening for you in Milana, and enjoy the day, the Wednesday, guys. Peter Tower. Take care, guys. See you.
Thanks.
Bye bye.
Thank you.